Hey Ravi, when is the best time to be buying Bitcoin?
Well, in this video, I'm going to share with you exactly when I'm looking at buying more Bitcoin, more Ethereum, and the altcoins. So altcoins could continue to bleed by another 40 or 50% from here. So it's very important we know exactly what our targets are, and I'm going to share with you exactly what I'm looking at. So if you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, the easiest way to know if you're in a bear market is essentially when news comes out that is really bullish for the space, and there's been plenty of that over the last couple of weeks, the price action does not reflect that. The price movements are not sensitive to even bullish news. This is the exact opposite of what happens when we're running up. So you would see in 2020 and 2021, when negative news did come out, it was very short-lived. It was a buy the dip opportunity really, because it stuck around for a couple of days, people complained on Twitter about it, and then all of a sudden we were back to the races and up we went. Now, before we get into a few of the indicators and charts that I'm actually looking at to predict when the bottom is, I think it's very important to know that despite being a bull market or a bear market, you need to know your own risk appetite. None of this is financial advice, and you need to have a strategy in place. Now, if you are looking at something like Australian real estate, want to get set up with a foundation, with traditional real estate, then definitely go hit me up. There's a link in the description below where you can book in a free chat and we can definitely have a session. If you've been following the channel for a while, you already know what my thoughts are around cryptocurrency, and I urge you to go and check out this video, which is when I was saying this probably might not be a good time because everything's flashing red, we're probably going to head down lower and it's time to cash up. So definitely go check out that video. That's where I started cashing up and not buying anything else. So there's really two tactics that I use when it comes to building my wealth position in cryptocurrency. Now, for everyone that follows me with my Australian real estate, I continue to buy even despite knowing there is so much fear in the market right now. Everyone's concerned about these rate hikes, but we've only really had 0.25% as an increase. What could happen moving forward? Well, nobody really knows, but when those indicators start flashing again, in my eyes, it's a very good time to be buying real estate. Now, when it comes to crypto, with those two tactics, I've got the one which is dollar cost averaging. Now, I've made a video about this as to how I do it, and you can check out this video, and it's my step-by-step bear market strategy of how I do that. Now, in addition to dollar cost averaging, there's one I call is back up the truck. Now, what's back up the truck? Doesn't sound so technical. It's
because they literally made it up like 2 minutes ago.
When we see capitulation, or I feel like it is the best buying opportunity of my lifetime, I will back up the truck.
It's like beep, beep, beep. And I will put as much money as I can possibly put in at that time to buy that asset.
Now, in this case, I'm going to share with you when my back up the truck moment is about to come. And I think it's coming a lot sooner than most people think. Now, when you're looking at dollar cost averaging, that's probably the set and forget moment. Now, despite the indicators not flashing that it's time to go in now, I am continuing to dollar cost average. How I do this is through Coinspot, which is where I set up the recurring buy. I go in there, it just sets it up itself. It talks to my bank account, just continues buying Bitcoin and Ethereum. And that's all I want to do. I want to keep stacking up those two assets because I think they're going to be worth a lot more than they are today. Now, there's a link in the description below where you can sign up if you haven't already. You get $10 worth of free Bitcoin. It gets you started on your dollar cost averaging journey. In addition to this, I also have a micro investing app, and that's specifically for crypto as well as precious metals like gold. So for me, I go in and buy Bitcoin and Ethereum, and it just sort of rounds up everything that I spend. It connects in with my bank account. You can definitely go check out a detailed breakdown of how I do this, how I set it up through the Bamboo app, which you can check out the video here. The other thing to take into consideration when you're going in investing in anything is to understand the macro side of things. So macroeconomics at a very high level, looking at what the governments are doing, what the central banks are doing with their fiscal policy and their monetary policy together to see which direction the government wants to take the economy in. Now, at the moment, we've got central banks all around the world that are actually going out there, increasing rates, and they're going to continue doing that as per their economists and their forecasts. So they're suggesting that we could increase by as much as 1% or 2%, which would be about 100 basis points or 200 basis points. And this puts a lot of fear into the market. And why? Well, it makes sense because we've got more debt in the system than we've ever had before. And in addition to that, if you're in Australia, you actually got told by the RBA that we're not going to increase rates till 2024. So what was the next best thing?
Let's go and buy some property and then just ram up all the debt because it's cheap.
Only for them to come around 6 months later, backflip on what they said, and they started increasing rates. Now, this is causing a lot of fear in the market. That is definitely translating into the risk on markets. What are risk on markets? Well, it's basically anything down the risk spectrum. When you're looking at stocks, particular industries like tech and growth, when you're looking at crypto, well, that's pretty much all of crypto because it's all risky. And then you look at NFTs, and that's definitely been a bloodbath because,
hey, it's pictures of monkeys and apes. Like, you can't get more risk on with that.
But during times like this, people have a flight to safety for cash, as well as traditional real estate and precious metals like gold. We've seen the prices of those continue to move higher, and I think that's going to continue for some time. Now on this channel, I'm going to have a deep dive into why interest rates cannot continue moving higher after a certain point in time. So if you are interested in that, definitely subscribe, put on the bell notification. I know about 40% of you that are watching the channel haven't subscribed. Not sure why not. Definitely smash that red button because I'm bringing out more content than I've ever brought out before. Now, until the central banks decide to change up their narrative and stop increasing rates, I think we continue to bleed here in things like crypto, in things like NFTs. Now let's deep dive into 4 charts as I attempt to do technical analysis when I'm going to back up the truck and buy a shitload of Bitcoin and Ethereum. What I have here is the Bitcoin logarithmic regression band. And what we can see here is clearly we've got this top end, which is the red bars, and then we have the green, which is the bottom bars. Now what we can do is basically look at historical data, and we don't have too much of this, but what we can do is start looking at periods of where the asset has actually been overvalued, fair valued, and undervalued. And based on this, what we're seeing is that we can see the peaks getting towards the red mark, and over time this actually starts flattening out because we have a law of diminishing returns. Now what we can see here is in like 2011 we had a blow off top. In 2014, we had a blow off top, and then we had our most recent one, which was in 2018 that most people remember, and we actually did touch the bottom of this red band in March of 2021 before we started capitulating again. Now what I want to bring to your attention is not so much the upper red bands, it's more so the bottom green bands. And what you can see here is every time we've entered a bear market, we end up finding our way down into the green zone. And we can see that more notably, especially after 2014, and then we saw it in 2018. As of today, 24th of May, 2022, we have started to enter the green area again. Now what we've seen based on historical data is as soon as we enter that green zone, we happen to spend some time here before we exit out. Now this isn't necessarily a bad thing because when we do leave, that is when we are confirmed into the next leg up of this cycle. So I think if we spend the next couple of months here, it could be quite fruitful for people to buy up what they believe is an undervalued asset. Now the next chart I have here is the Bitcoin weekly moving averages. What we can see here is a couple of different lines that have different colors, and hopefully you can see that on your screen right now. But essentially there's the 4 lines that I want you to pay attention to. The first line is the 50-week moving average. Then we have the 100-week moving average, then the 200-week moving average, and then finally the 300-week moving average. Now, why have I got these specifically on here? Well, it's because if we look at previous data and we look at every time we've gone into a bear market, when we come down past the 50-week, we traditionally go and hit the 100-week. If we hit the 100-week and we break through, we go in at a 100% chance to go hit the 300-week. And that's exactly what I'm looking at right now. You can see that we've broken through the 100, it's flirting with the 200, but if history is to repeat here, we could see this capitulate all the way down to 300-week moving average. Now for reference, at the moment, Bitcoin's price is trading at about 30,000 USD. The 200-week moving average is at 27,000 USD, and then the 300-week moving average is at 21,000 USD. This is important to remember as we go through this video when I share with you my target of when I want to buy at what price. If you are enjoying this content, then definitely smash a like button. It helps support the channel and gets these videos out to more people that really need it. The next chart that I have here is the pool multiple. Now what this is it's calculated by dividing the value of the day issuance in USD by the 365-day moving average of daily issuance in USD. Essentially, it's to do with supply, price, as well as the miner revenue and profits they can make. So let's jump into that. What we're seeing here is in blue, we're seeing the Bitcoin price, and then in red is the pool multiple. What we're able to see from this chart is that these big spikes generally happen around the blow off top. Now, if we look at more recently, around May of 21, we didn't get a blow off top, but it was a lot higher than the average. And what I want you to focus on is not the highs, but the lows, because what we're trying to do is figure out, well, when is the best time to find the bottom? When is the bottom of Bitcoin? So over here, what we can find is historically, whenever we've gone into a bear market and we're trying to find a bottom, it's actually come in at lower than 0.4. So you can see here in 2018, we fell all the way to about 0.3. And if you look at the COVID crash, around that time we got to about 0.42, and right now we're trading at about 0.55. So that tells me we still have a little bit longer to go before we finally find the bottom. Now, a lot of this stuff could be lag data as well, so we could already be close to the bottom, if not already there. And the final chart I want to show you is the BTC market value to realized value ratio. The reason I'm showing you all in relation to Bitcoin is because it is the biggest cryptocurrency. You can't have altcoins absolutely taking off in altcoin season if there's not enough confidence around Bitcoin first. So if we do see another rally, we're probably going to see that with Bitcoin first before we have the altcoins follow. Think of it like going up a hill. You have Bitcoin leading us, and then you have the altcoins coming up as Bitcoin turns around and says,
hey, what's up? It's pretty chill out here, so you can come up and join me.
And again, what we can see in this chart is that the spikes are related to the blow off tops, but what we're looking for is the bottom. And what we can see is every time it is below 1, we've pretty much hit a point where it was a great time to buy. And we've seen that in 2018, we saw that again during the COVID crash, and right now we're at 1.24. So again, we've got a little bit further to fall if these charts are to play out. Based on the fact that the Fed and the central banks around the world are increasing rates, we've got 4 charts that are all predicting that we're still a few months away from the bottom of this market. What exactly am I doing? Well, firstly, I've got my first tactic, which is DCA. And the reason I do that, despite knowing all of this information, is because what happens if the charts are wrong? What happens if the Fed decides they're not going to increase rates? I don't want to be completely out of this market because I still believe these are one of those assets that are going to have exponential growth over the long term. In addition to that, we could see the prices increase, and we look back at this moment and go, well, if altcoins are down 80 to 90% and we've got Bitcoin down about 50 to 60%, it's a lot less risky to buy now than it was back then where we did see the prices at all-time highs. The target range I'm looking at is 20,000 USD and 23,000 USD. This is the target that I'm looking at to back up the track and buy as much as I can during that period. In addition to that, I'm going to continue dollar cost averaging in the meantime, and even if the prices fall below that, I will continue to dollar cost average because I will never spend all of my money available, always have some cash on the side because it could go lower. The earliest I could see this happening is in the next 3 months, and I think most likely it'll happen between 3 and 6 month window. So if we're in May right now, by the end of the year, we could probably see the start of the next phase, or at least the next part of this run up. I know it's been a bit more detailed video, it's a bit longer, but I hope you enjoyed this. If you are interested in my thoughts around what the Fed rates are going to be, what Australian RBA is actually going to do with rate hikes, and how that's going to affect housing prices, definitely subscribe. That video is coming very soon. Thank you all for watching, and I'll catch you guys in the next one. Thanks, guys.